And Thailand is suffering similar problems. Its economy grew less than 1% last year, and that's also been blamed on lower spending. Thailand has endured years of instability. Even though a military takeover last year calmed much of the volatility, foreign investors aren't convinced. Tony Cheng reports.
The goldfish at the Thai Stock Exchange have seen considerable prosperity so far in 2015. In January alone, the SET index increased 5.6%. And since the military coup, Thailand has had the best performing stock market in the region. That's the result of stability, say some analysts, who credit the military government with steadying an economy shaken by years of street protests.
This is the key theme of the investment for this year, that the government will try to disperse the budget. They will try to implement infrastructure investment. So a lot of companies will benefit from this kind of activities.
But while domestic money is poured into the stock exchange, foreign investors have pulled out, to the tune of $180 million so far this year. Overseas, concerns persist that Thailand has only been stabilized temporarily. The stock exchange has certainly benefited from the stability that's been returned by the military coup. But outside Thailand, there's great concern that meddling by the army could be interfering in civilian affairs. Even here at the stock exchange, you can see right outside, they parked an army Humvee. And the concerns go deeper than Thailand's politics. Recently released figures show Thai exports have fallen for the 20th month in a row. Exports make up 70% of GDP, and the drop has shown some fatal flaws in Thai manufacturing. An over-reliance on old technology has seen Thailand easily surpassed by manufacturers in Vietnam, the Philippines and Indonesia. High labor costs and an aging workforce have also cut Thailand's competitive edge. And while the kingdom's bounced back in the past, earning the name Teflon Thailand, this time the problems are deeply embedded.
If you see the past and see the trend of the past, you probably have some comforts. And I think that comfort zone is quite dangerous. Now we're facing the real concern that the external demand may not come in for us, right? So we have to upgrade ourselves to compete, and otherwise we're going to risk being the sick man of Asia.
As if there weren't problems enough, the region seems soon to be engulfed in a currency war. The Conservative Bank of Thailand is resisting calls to raise inflation rates, forcing the value of the Thai baht higher. But as regional currencies drop their value against the dollar, Thailand's generals may be heading into a battle they don't know how to fight. Tony Cheng, CCTV, Bangkok.